But look, ultimately, my goal with this channel is to get Bitcoin information out there so people cannot be scared about investing in Bitcoin. One of the things that I was completely wrong on was that I thought the way that these institutions would go through the adoption of Bitcoin would be, it's obviously started at the bottom, and that's fine. Now we go to the, $10 million net worth, $30 million net worth, $50 million net worth, and then the ultimate, $50 million plus. That's not what's happening. Now, this is the one thing that pisses me off, right? What's happening is all the people between 500,000 and 30 million who have the majority of their assets in real estate, based on every study that you can read, are being completely ignored. BlackRock is going straight to that top 1%. And that's what they should be doing, because that's the people with the capital. So you want to focus on the people with the capital. I want to make sure that those people between 500,000 and 30 million stand a chance. And the only way you stand a chance is by getting into Bitcoin. So ultimately, subscribe to the channel, because when you subscribe to the channel, you help me spank the YouTube algorithm to getting this content out in front of more people so people can get invested in this before it's too late. The type of buyers that are now coming into Bitcoin are people who have an immense amount of wealth. They are in wealth preservation mode to an extent. They're not really in their primary objective. While yes, it would be to grow their wealth, it's really to maintain the value of their wealth according to how many dollars are printed. And so when you get that type of buyer coming into an asset, the number one thing that they believe in is diversification, whether it's true or not. So they believe in diversification. And it's one of the things that Bitcoiners are now going to have to deal with, because I do think that the Ethereum ETF is going to cause a distraction to Bitcoin. I do think that if there is any other shitcoin ETF, is going to affect the attention that goes to Bitcoin, because somebody who's got $100 million net worth trying to allocate 30% of it to Bitcoin now gets a phone call from their advisor and say, hey, Ethereum's this new thing, BlackRock's behind it as well, we should probably get you an allocation into that too. The answer is going to be naturally yes. Okay, so what will happen is, let's say they want to put $30 million into that, they'll put $5 to $7 million into the Ethereum ETF and the rest of it into the Bitcoin ETF. And this is just going to happen. It's something that we have to accept, and it is going to cause a little bit of a capital slippage from the Bitcoin ETFs that are out there. The good news is that we've just expanded the amount of capital that can go into Bitcoin by 15 to 20 times. So overall, the price of Bitcoin is still going to go up, and we're going to have a really good time. But I think if you're looking at price appreciation, Ethereum probably is going to as well have a price appreciation. Now, do I think that's what should happen? Absolutely not. I don't think anyone should be investing in Ethereum. In fact, if you are in, like myself, if you are in wealth growth, if you're at the stage of wealth growth, right, being either you're young or you're in the point where you've not focused on your wealth for the first part of your life, but now you are focused on it, you want to focus. You want to focus in on one particular game, and you want to diversification isn't really the thing that you want to be focused on at that point. But when you're preserving wealth, which is what this new capital that Larry Fink is bringing into the game, that President Donald Trump is speaking to, they believe in diversification because the goal is wealth preservation, not wealth growth. So it's something that we're going to have to deal with, and I think that Bitcoiners are going to have to get used to the idea that there is going to be millions of dollars, if not billions of dollars, that ends up going into the Ethereum ETF. I wouldn't be surprised if there's $100 billion over a time period that goes into the Bitcoin ETFs, if now 10, 15, $20 billion of that is diverted towards the Ethereum ETF. I wouldn't have any surprise in people doing that. Now, here's what will happen. The very first time Ethereum fucks up, something happens to Ethereum where it is uncontrollable, unexplainable, etc., you're going to see that capital fly. They're not loyal to Ethereum. They're using it as a speculative, tool to try and gain, overall return on this industry. But the moment that anything happens to Ethereum, you're going to see that capital fly, and it's going to go straight into Bitcoin or risk-on assets. But overall, I'm up a little bit earlier than the alarm today. Overall, you are going to see some spillage over from Bitcoin into the into Ethereum because of the ETFs. Now, there's huge advantages to having this Ethereum ETF for Ethereum holders. It's the same thing as for what's happened with Bitcoin, its ease of ownership, etc., etc. But unlike Bitcoin, there's huge disadvantages because with Ethereum, you can stake it and all this other stuff. You can't do that with the ETF. So if you're a professional investor and you're looking at all these opportunities to stake this and generate yield and all this other stuff, the ETF is not the most ideal way to do that with Ethereum. So you're going to start thinking about, how do I do that? So overall, there is a rotation of buyer coming in. That buyer does want diversification, and BlackRock and everyone else is here to give it to them because BlackRock is not spiritual or religious about Bitcoin, right? They will make money from it. They're religious on generating profits for themselves, but they're not religious on how those profits get generated. They can obviously see when you've got the CEO going on television talking about how he was completely wrong about Bitcoin. They can obviously see the advantage, but what they can't figure out they can't tell their clients we're only focused on this one thing, because then if, let's say, Fidelity focuses on Ethereum as well and BlackRock doesn't, and the Ethereum product outperforms the Bitcoin product, now all the clients of BlackRock are going to say, hey, why didn't you get us into this product, right? And then you start seeing some capital flight. So as an asset manager, you've got to manage assets. Goal isn't to be religious about one thing. So that's what I think is going to happen. There is a rotation of buyers. It is going to be quite interesting to see how this sort of plays out. The ETFs obviously start getting traded, and we will see how that's going to harm or help Bitcoin, right? Because a lot of people will look at that and go, okay, well, now I can compare Ethereum and Bitcoin and decide which one I want to go into over the next half a decade or 10 years or something like that. And this is all professionalizing this industry, which is extremely important, which is what we want for the industry. But talking about Bitcoin itself, I mean, look at how powerful we've had. A moment that's absolutely unbelievable. We've had Mt. Gox start to distribute their coins. You look at all the media and it says Mt. Gox sends $3.2 billion worth of Bitcoin. And the average brain automatically thinks it's going to an exchange, it's going to be sold into the market. That's not what's happening. Mt. Gox is sending Bitcoin back to users. Now the users may decide to sell some, but overall I would assume, my guess is that the Mt. Gox selling pressure is going to be less than the Germany selling pressure, which was around $3 billion. So that's what I think is going to happen. Also, it's not one entity going straight into the market and hitting a market sell order. It's thousands of different people selling at different times, et cetera, et cetera. So I think it will get swallowed up into the market a lot easier than the Germany selling pressure happened. But ultimately, there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.